So I think any investment has an expense, right? If you own your own property, you have expenses with property managers or expenses or whatever it may be, vacancies. If you have a financial advisor, stock market, you have an expense. So I think these expenses are right in line or actually less.
Being able to dial in our income is huge for us right now. And it's wonderful. It's just, we don't need it. We don't necessarily need it. Sit there. If we do, we pull it out. And yeah, it works well, very well.
Welcome to the Build to Billions podcast, where we help successful entrepreneurs and investors on their journey from millions to billions. And our goal is to help you scale your business and your wealth so you can make more of an impact. Hey, my name is Brett Swartz. I'll be the host today. I'm excited to be shooting live in person with two clients and friends here at the DLP conference in St. Augustine. And we're going to be talking about their journey to the Deferred Sales Trust and opening up freedom and impact for their family, as well as just real estate in general and ways to invest. And so I'm excited about our two guests. They are out of the Yosemite area. If you've never been to Yosemite, you need to go there because it's one of the most beautiful places in the world. And they're a place called Bishop, California. But they own an apartment complex, and this apartment complex was in Placerville. And we're going to dive into what this deal was, what it meant for their family, but also how they were able to exit using capital gains tax solutions, deferred sales trust. Please welcome to the show with me, Warren and Catherine Strand. Warren, Catherine, how are we doing?
Fine, thank you.
Doing well, Brett. Doing very well.
Excellent. And so this is really cool, right? We've been hanging out a couple days here in sunny Florida, the free state of Florida.
Yes.
We're just 2 days post-election,
Yes.
right? But before we go into like the current state of where we're at, I want to go all the way back and hear a little bit about your guys' story and your focus. Maybe Kat, start with you and your service to our country here, and then we can move into what Warren was doing all those years ago.
All those years ago, I was in the Air Force, retired as a lieutenant colonel, was an engineer, worked on some equipment for the pilots. Retired from there, so to speak, and started working for a company called Pan Am-Sat, which is a commercial satellite owner, operator, distributor of commercial content. I was a customer rep for them, so I would go to the factory of where the satellites were made and would make sure that they did what we needed them to do for our satellites. And then had the privilege of going to the places to launch, like in Kazakhstan, Russia, for the Proton launch, French Guiana for the Ariane 5 rocket, and Cape Canaveral, of course. So that was my story until I met this guy. And
where did you guys meet, Warren?
We met in Mammoth Lakes, which is a ski town. Mm-hmm. And we met randomly on New Year's Eve.
Whoa.
She was out visiting with friends to Mammoth Lakes.
To go skiing?
And I actually worked in the town. Mm-hmm. And they were out and about for the evening, and one of her friends knew my friend and called to wish a Happy New Year. Mm-hmm. Unknowing that they were both in the same town, because they were out of town visiting Mammoth Lakes at the same time. Mm-hmm. So during the conversation, they said that they have room for 3 more people at their table, and they had made reservations a year in advance. So we happened to have 3 guys, and they had 3 girls, and we popped into a restaurant for the evening.
So
it's history.
The rest is history. I've been to Mammoth too, by the way. It's a wonderful place, beautiful place.
It is.
And okay, so now fast forward, you guys and you guys are owning real estate.
Yes.
You guys are. In fact, I think Manhattan Beach was the beginning, right? Maybe a duplex, right?
Yeah, it was a tiny duplex on a half lot, and sold that. Did a 1031 exchange. Mm-hmm. And bought Placerville.
All right.
That's correct. And I don't know if it was myself that talked her into selling the property in Manhattan Beach, because that's a tough one to sell, because it's highly appreciated asset.
Sure.
And I had this crazy notion that it wouldn't be a bad idea to sell when the market was down. Because if somebody wanted to buy it down there, they probably wanted it pretty bad. We figured if we get a good price for it during a down market, we could take that money and go reinvest it in a down market.
Right. In that scenario, the 1031 makes a lot of sense, right? Because you're trading 2 units and you end up trading into 15 units.
Correct.
15 units.
Right. And you're able to scale that wealth, and also it's closer to where you guys were going to be living, right? Is that part of it? Or you already were living there, or?
No, it wasn't. Really wasn't close to anything where we were living. Nothing is close to where we're living.
You were already in Bishop at that point, or you the Yosemite area?
Yes, we were already in Bishop at that point.
And during the 1031 exchange, that was part of the problem, was trying to locate that replacement property and accepting that it's not right in our backyard.
Right.
Yeah.
But it was the next best thing.
So you're in Yosemite, 2 units to 15 units, 1031 exchange.
Yep.
You're buying it at a really good price, right? And and for many years, you guys
worked on it.
Worked on it, right?
We enjoyed it. We love working on it. We love fixing it, painting it, working with property managers, doing a lot of the property management as well, and the bookkeeping and so forth. And we liked it.
Yeah.
And he has properties as well, and we're doing it all. We're going different places everywhere. Whenever we were going to a property, it was at least 200 to 300 miles to get there. So it was always planned out. But it was fun. We enjoyed it.
Right. And how many years, Warren, did you guys own it for?
We owned it for about 12 years.
12 years? Okay.
Yeah, 12 years.
Yeah, and then you're also looking at retiring from your day job, and you still had your day job going, right? And
Correct.
all of that. But
yes.
But also the daughters, your 2 kids. Tell us about that.
Well, we have beautiful two twin daughters, and we had them, let's see, about 12 years ago.
Yeah.
And so now we're pushing mid-50s with 1-year-olds.
And a bunch of property that we're trying to maintain at the same time.
Yeah.
Yeah.
So what did that feel like, that transition? I mean, it wasn't all at once, but it was slowly like, okay, the kids and the properties, right? Sometimes maybe the tenants sometimes feel like you really take care of the tenants, and then of course you have your family. So talk about a little bit of that energy of driving and the energy of managing, and just that, even though you guys are hard workers, you guys figure it out.
Right.
But what was that like during that, that transition there?
Well, being new parents and learning as you go, the further we got into being parents, the more we realized how important it was to spend with our kids. So, and we also knew that it was important to maintain our properties, keep it close. But we chose our kids over our property.
We started with bringing our girls with us.
We did.
And showing them some of the things, how you fix things, how you handle things, how you manage things. And it was interesting for a while. But yeah, it wasn't, we needed more time with them.
Yeah, and because it's out of town, we were always on a time frame. We couldn't leave our jobs because we both were still employed. So when we were over there, we were trying to do everything we possibly could in a short amount of time. So then,
and the NOI, the cash flow was good too, though, right? You got
it was,
yeah,
it was. We improved some of the rents over time, and we bought it for a good price. And we were happy with it. And it was real estate. It was
something solid,
consistent.
Yeah.
So,
relatively.
You know, I think I also noticed it seems like you guys are a good team in the sense that you guys complement each other. Or tell me about like working together, getting strategy, numbers, being handy, doing the work, like navigating that piece of it. Like, talk to a little bit about just the journey of that.
Well, I was brought up in kind of a construction background, and my dad was pretty good. He had owned a bunch of real estate, so I had no problem jumping in and doing all the dirty work. I'd do whatever it took. And Kat learned a lot from me, and she'd also help me plan. Because sometimes I would just jump in, and then I wouldn't have a real good game plan.
I'd be the delegator. I'd do the research, find people to help and plan it out. And so that, okay, we've got 4 days and this is what we're going to do, and stay focused on that and go from there. And then I'd leave him there and take the girls someplace.
Yeah. I've heard the thought of the visionary and the integrator. I don't know if you've heard this concept, right?
Yeah.
And so you need both, right?
Right.
To connect. And sometimes you wear both hats, but in general, you kind of have that strength. Kat, I'm kind of curious because I know your profession, after retiring from the military, your focus and your consulting and kind of what you were doing, I mean, it's pretty cool. Can you share a little bit about that?
Oh, you mean you mean the satellite industry,
Yeah,
the space industry?
yeah.
It was so much fun, so much fun. I have to say, I'm one of the few that feel extremely lucky that I found something that I was passionate about. I never worked a day in my life. I worked, I'd say, probably 10-hour days, 5 or 6 days a week.
Okay, Kat, so it's really cool. I want to kind of connect these two things, right? So it sounds like you're the planner, and you were you're going to be thoughtful, thinking it through. You're working with rockets. You're working with security. What satellites? Okay, so
communication satellites.
Right. We saw Elon Musk, bring that rocket back in, this
awesome.
whole thing, right? So you're doing all this cool stuff, and then yes, that's your profession. You're still consulting. You're still doing that, yes?
Yeah, a little bit.
Okay.
Not much.
Yes. Okay. So, and then Warren. Okay. So your profession, right?
Yes.
Your care connection nurse for how many years?
22.
22 years. Okay.
Yes.
Did you feel like sometimes your care, compassion, and connection with the property, with the tenants, that was something that was meaningful for you as well?
Absolutely.
Yeah.
I think that just personal relationships really helped me a lot with that. Just connecting with people. So making sure they had a nice place to live, that it was functional. They liked to be there. They wanted to be there. Tried. Yeah.
And then the property was producing about $120,000 in net operating income.
Correct.
Right. And we valued it at about 2.5 during the time. And this is before interest rates really shot up into a new level, like doubling in a period of time. And so we were going through this escrow, and if we remember right, you list the property, and even before that, you're looking at the deferred sales trust, right? Because you're saying, I don't necessarily want a 1031 because we have 15 units now. We don't necessarily want 30 units,
Yes.
because that could just increase the headaches, and that could just increase the the stress and the time and the energy. And so you're looking at the deferred sales trust. So talk to us a little bit about, Warren. Like I've been talking to you for years about it, right? But at the same time, what was your initial thoughts? And then we'll ask Kat the same thing.
Well, I think we're just hesitant with the security of a new vehicle. And the property, we'd put so much time and energy into it, it was difficult for us to just let it go. And hoping that we'd still have a monthly income. Because it was kind of our main source of income. We had others, but it was one of our more substantial pieces of income. So we had to digest this decision over the course of 2.5 years.
Took a while. Kat, what was your thoughts when you first started hearing about the deferred sales trust, this new vehicle, and how this might work for you guys? Do you remember your thoughts?
Yeah, well, so when it comes to finance, barf. But, technical stuff is really cool. So I deferred a lot to Warren. But one of the big things was, here we are in control. We do what we want to do. We made the decisions, and that was it. And now all of a sudden, we have this balance between family and making all these decisions and taking care of all this other stuff. We had to let it go and release the control and trust. And that's where you came in, right? And so it's a big step for anybody that owns property and is in control to just let it go and trust.
Right.
And so it's a big step.
So it's a huge step. So let's talk about that, right? So control's a big piece of it, right?
Yes.
And And so we started saying, well, where could we invest the funds, right? So before anything happened, right? And this is part of why we're here at DLP Capital, right?
Right.
So do you remember this part of it where I started introducing you to these groups where the funds could be?
Yes.
And getting a feel for that. So talk about a little bit of that journey and talking with, I think it was Larry at DLP Capital, hearing from Don Winter, and going through of, wait, we own 15 units. We could be in a fund that has 17, 18, 20,000 units, and we could be lending to multifamily properties, right? So we could diversify that. Like, talk a little bit about that piece and how that all maybe helped you feel a little bit more comfortable about the control aspect.
I think when we realized that we weren't the only people that owned property, we weren't the only people that managed property, and we realized there are people that own much more property than we do, and they seem to be doing fine. That was comforting. We then kind of digested the process, thinking, these guys do this every day. We do it only half the time. And if they're doing it every day, then they're probably doing a better job than we are, or as good, if not better. And so that's kind of, I think, where I got more comfortable with it.
The other part would be control for like trustee and the deferred sales trust, right? So there's two different controls. Like control, like we can control our destiny cat if you let me know. Yep. And then, but as owning the property, and then it was like, well, there's this new vehicle, and we'll go back to you, Warren, here in a second here. So what did you feel like the trustee and the vehicle, like structuring that kind of thing? Any thoughts or feedback on that for anyone who's listening and trying to wrestle with that piece of it?
Wrestle with it. Yeah, it's a step that you just have to take and believe and trust that it's okay. It's okay. And also the fact that we had two girls that should take priority helped me get over that hump to, okay, it's about the girls. So
that's good feedback. Warren, how about you for the trustee and the deferred sales trust? You used to be hands-on, getting in there, fixing it, getting it done, and having to say, okay, I'm gonna release some of that control, a lot of that control, and trust in this trustee, myself, my company, right, and this deferred sales trust,
right.
How did you help? What was the best way that you were able to move past that?
Boy, I think the way you presented the DST to us was you outlined it, and we went over it and over it and over it. And
over
we
it and over it. Yeah. We asked a lot of questions, and you answered every one of them. I have a notebook.
And with the numbers that we went over and over and over, it seemed like it was advantageous financially to go this route. And then it became like, well, why wouldn't we? That's how I felt.
And you still have plenty of control because you're always looking at other vehicles and ways to invest and how to better what we have invested. And Brett's completely open to that. And it's like, okay, you want to do that? Fine, let's do it. Let's make it happen.
Exactly.
And me, I'm like, okay, leave it there. We're fine. See you in 10 years. Warren's like, how about this? What do you think about that? And you're like, yeah, well, okay, let's do it. So.
Yeah, that's a good point, right, Warren? Like the flexibility with that. Like once you know that there's controls in place, and it's more like a like a 1031 exchange. You have to give up control where the funds sit there for 45 days to 180. This is more like a longer term 1031, right? Yes. Is the way I think about it, right? And but in the meantime, you can go into multiple investments at different times,
right? And
you could also go back into your own deals, right? And buy that, and so you're not necessarily having to forever leave the ability to be managing and running your own deals.
Correct.
You're just doing it in a different vehicle in a different way than the traditional 1031 exchange. So what would you say to those who are listening or like, wow, like, on the other side of it now, right? You're on the other side of it and you're going, was it what you thought it would be as in regards to the controls or any other feedback on that and the flexibility with it?
I think that you still do have control to a certain extent. And at this level of control is actually a really comfortable level for me because I'm not overwhelmed. We have partnerships. We have more than just Kat and I working together.
Yeah, we have you helping us out.
And we have
bouncing ideas
any other syndications or any other real estate investment companies that we've invested with,
Mhm.
they have large numbers of people
Right.
working
Yeah.
with us,
Mhm.
For us.
for us.
Yeah.
So
Yeah.
that's really comforting, actually.
Absolutely. It's like a team, right? And what I look at it, it's like we're building a dream team.
Right.
And a lot of times the traditional way of investing or traditional is like a financial advisor, and they have their analysts, they have those folks that do stocks, bonds, mutual funds. As real estate owners and business owners, most of my clients, like you guys, have made the majority of their wealth in real estate, right?
Correct.
Or business ventures. And so to know that you have like a DLP Capital who's buying a brand new bank and bringing it on, it's a big deal, right? And you have they're buying buildings all the time. They're building, they're lending, they're doing all of these different things, and they have these funds that are performing, doing great. And so, to me, it's like, yes, you're getting so much more versus what you have, and it's kind of like choose your control, choose your team, choose your freedoms.
Correct.
Oh, okay.
I don't know. I mean, it actually expanded what we have,
Yeah.
and we thought it'd be taking away from what we have.
All right. So numbers wise, let's go through that in case our clients are wondering, or potential clients are wondering, or leads, or anyone listening out. The NOI was about 120,000 was what we estimated.
Correct.
Right? And we had about a $2.5 million exits, 15 units in Placerville, which, by the way, we had 2 escrows that both of them fell through, and the third escrow was the charm.
Yep.
There was the fires that came on. It almost burned down Placerville.
NorCal.
There was insurance costs that went through the roof.
Right.
There was just uncertainty in the marketplace as a whole, right? There was a number of things. There was the permitting issues that kind of were a surprise that kind of hurt another
Yes.
one.
Oh, yeah.
Yes.
Yeah,
The illegal unit that who knew?
Illegal
Yes.
unit.
And then the insurance, fire insurance,
Right.
tripled.
Right.
Tripled just before we sold.
Do you guys remember what I said as we
Yes.
were going through all of these things that were like, big old red, brick walls for buyers and deals? And
Yeah,
at
yeah.
one point, you guys were like, well, maybe we're just meant to keep the property. I think I remember you saying that,
Right.
Kat?
Yeah, we
Yeah.
kind of got to that point.
Yeah.
Mhm.
We did.
Yeah.
And I think I remember saying, "Hey, hold on. Remember what you wanted before. We're gonna get you the time back with more time with the family, right? And we can increase the cash on cash
Right.
return. We're gonna diversify, and you can always go back in if you want to,
Right.
right?
Right.
And so then you guys say, okay, well, hold on for this last buyer. If this buyer doesn't work out, you guys are probably going to hold. And had that happen, by the way, the marketplace and interest rates went through the roof. Things really changed pretty rapidly.
Mhm.
But you said something yesterday at the conference when we were here. What did you say about there's not a day that goes by that
There's not a day that goes by that I don't think
Don't
that I
regret.
actually miss Placerville.
Yeah.
There's not a day.
yeah. I think another one you said you didn't realize how much some of the weight's on your shoulders of owning the active real estate until you're 3-6 months out of it and you're going, I don't get the calls. Am I having to drive? Like you want to touch on that?
Yeah. Well, recent events have reignited things where now we're getting phone calls.
Mm-hmm.
This isn't working. This has to be repaired.
For other properties that
For
you own.
other properties
Right.
that
Previously were under your management, now they are.
Right.
Yeah.
And so we're thinking about that, going, wow, we have not had to do this in quite a while. And all of a sudden, you sit down to start doing some math with the girls, and you get that text, and you go, okay, girls, you figure it out. I'll be right back. And it's like, oh, this is killing me. No, I don't want to have to make that phone call. I don't want to have to find the right plumber to do what has to get done by tomorrow because somebody doesn't have water. And of course they have to have water.
Right.
So math homework or get water to a tenant. So yeah.
And it's you're inheriting the properties, in case someone were wondering, right? You've inherited a number of properties now.
Correct.
And so now it's now your stewardship to steward that
Yes.
wealth and to manage it. And when you own properties, it's part of your stewardship to take care of the tenants, or the manager take care of the tenants. So it's a good thing, but it can pull you right back in.
Yes.
To a lot of the stress.
Just today, I just okayed
A new
pretty
HVAC
large
system.
expense on a new heating system. Upstairs, of course. Crane required.
Crane required.
So I was texting on the beach.
Yeah.
But it's okay. I don't. It's just we've worked hard and we are hard workers and always will be. But We just need to
One.
reallocate our time.
Time to harvest, right?
Right.
And time to harvest, and there's a time for every season of ownership.
Yes.
Right. And so enter the deferred sales trust, right? We mapped out a plan and we said, look, we can at least increase your cash on cash return from $120,000 to about $190,000 net of fees. Like it's just we feel really good about this.
Yes.
And now it's been over 2 years, right? I guess it was November or August of 2022.
August of 22.
And now we're basically November of 2024.
Correct.
Right? So it's been over 2 years. So that big cash on cash, right? And it's performing. We're doing great so far. We bought some properties at a discount, right? We found a 450 unit property in New Jersey.
Yes.
That we think will probably double in about 3 years from the time it was purchased because we bought it at a discount. Being a third party group did that. We're a small investor. The trust is.
Right.
So, and then DLP is the biggest holdings for the trust with the lending fund. And I think we're also in the housing fund, right?
Yep.
And even the buildings communities fund. I think
yes.
we're all three funds.
Yes, we are.
So it's going great, right? And what's your feeling on the investments and the return so far?
They give us a monthly statement twice a month.
The DLP, yeah.
On the
They're on
1st and on the 20th.
Yeah.
It doesn't matter if the 1st is on a Sunday or a holiday.
Yeah.
I get a statement, and it's consistent, and it's real. It's satisfying.
All right.
And so far.
It's durable. 10%. Never not pay 10%. Never lost a single dollar. I also think it's really good because when you say it's real, I think what maybe you're saying, Warren, is you can completely understand it because you've been in multifamily your whole life, right? Investing, right? And so like, oh yeah, I understand occupancy levels. I understand cash on cash. I understand what's going on in the market.
Right.
It's not something that maybe sometimes the stock market can be,
right.
A lot of things out of our control. It could be wars. It could be change of presidencies. It could be inflation. Real estate generally does better during inflationary periods of time, right? So when you say real, is that what you mean by that? Or what are your thoughts on that?
Well, I kind of go back to, I think, yes, partially, but I kind of go back to just the trust factor of somebody else handling my money. And so DLP is just,
doing a very good job.
At first, I was like, okay, well, let's do this. But over the years, they've been so consistent, and so, I say real in the fact that they're tangible. They're just, how do I?
They're doing it.
They're easy to trust because they're professional, and there's a word.
Return on investment and return on impact. There's impact there, and there's intention. They're doing not just to make money. They say what they, They're not doing, and
their
so
actions,
speak louder than. But
they have the words and the values, but they're living them out, right?
Yeah.
And they're also performing on the investment. So it's impact and investing. It's the and concept here, right? That Don was talking about. Don Winter, who's a phenomenal leader,
correct,
and is on a mission. And it's like, I just feel great about moving with them, right? I trust them. I trust my clients, trust them, and everyone I've introduced them are like, hey, let's go. We're part of something even bigger, right?
Yeah.
And so that's pretty neat, right?
Yeah, absolutely.
So okay, so I think another one that comes up sometimes is the legality, right? So we're in California and you're selling, and your CPA. I don't know if there was a lot of pushback or not. Do you guys remember? What was the pushback? Was there?
He never heard of this vehicle before, and he's like, okay, well, you're going to tell me what you want to do. He's not a CPA, very knowledgeable, very much self-taught, and you give him information, and he goes and finds it, reads it, digests it, summarizes it for us, and say, well, here it is. Love the guy. And he was like, wow, I've never heard of this before. Let me get back to you. And I think his summary and bottom line was, well, it's just like an installment sale, and we'll treat it like an installment sale, and we're fine.
Right.
And we moved on.
Yeah. Do you have any hesitancy on that, or was there any other pushback or anything to add to that?
No. I think that's what we did. I think you were upfront with us and open. And I believe he was on a conference call with us, and he asked like one or two questions. And after that, he was just like, I do not see why this won't work.
Exactly.
Yeah.
And for those that are listening, it's now thousands of transactions, close to 30 no change audits. And there's also lifetime audit defense provided. And there's a CPA and a tax attorney who created the structure that provides that legal aspect. Our role at Capital Gains Tax is to be a trustee to help to manage the trust, work with clients day to day, and overall just make it, be as great a fiduciary to make it perform as we possibly can to make sure we pay back the money and do everything that's going to be in the best interest of the clients, you guys.
Mm-hmm.
So that's legality. That's controls. The other one is fees, right? So the big one is like, hey, how do you make the DST an investment on an expense? And we went over a lot of numbers. Kat, you're smiling.
Yeah.
So what comes to mind as we looked at the numbers and understanding all of that?
Well, it's the fees are what the fees are.
Mm-hmm.
And I get to listen to Warren once a year when we go through the fees.
Mm-hmm.
And he's like, he doesn't, tipping is difficult for him. So, these fees are a little difficult for him, but they are what they are.
Mm-hmm.
And it doesn't overwhelm what we're bringing in.
Mm-hmm.
And, you've done a whole bunch of work. You deserve some of this money for all the work that you're doing.
Well, thank you.
So I'm fine. I'm fine with
I'd love to hear from you, Warren, because I know there's always maybe more of the spender and the saver in every relationship, right? And understanding how to make the DST an investment and not an expense.
Right. Well, I think the fees are necessary, one. Two, the way it's structured, it's really such a small portion. It really is such a small portion. It's the initial transaction, there's some one-time fees that occur, but those one-time fees are for the duration of the trust.
Mm-hmm.
So really, that's just that number is magnified in the beginning, but if you spread it out over 10 years, it's not bad at all.
Right.
And
you can go for 10 years, 30, 40, 50, it's still a one-time fee.
Oh.
You can pass it to the kids. So tax attorney is always a one-time fee, which is just a little reminder, right?
Right.
And the trustee fee is the recurring one. So now keep going.
And so I think any investment has an expense, right?
Right.
If you own your own property, you have expenses with property managers or expenses or whatever it may be, vacancies.
Mm-hmm.
If you have a financial advisor, the stock market, you have an expense. So I think these expenses are right in line or actually less.
Well, it's a good point. Property manager. Let's say you have a wonderful 3 or 4 months where there's no issue with a tenant at all, any of the tenants. They still get their 5,
it's based
8,
upon
10%. It's based on income, right? And so let's say they're doing absolutely nothing for a number of months. They still get their 5, 8, 10%.
Correct.
Right? And whereas Brett is always doing something, especially with Hugh, because you're always coming up with something new and having some ideas, and Brett's always like, okay, all right, let's look into this, let's do it. So
it's definitely different than the traditional, like, hire the tax person to do the tax return, or hire a living trust one time. It's definitely like, hey, how the value is, finding the DLPs, finding the groups that they're gonna double, probably double the money
Correct.
in 3 years on an apartment complex. Structuring or finding always ways to improve. And that's how I approach it. But I'm curious. What you think?
Yeah,
Mark?
and that is actually probably one of the best benefits of this, and that's where your money's going. It's like Brett's a great bird dog. He's just like he's always looking for the next best opportunity, and we've relied upon that as for our investments. And so, that's definitely worth
the fees.
the fee.
Yeah.
I mean, that's a no-brainer.
Yeah, and we like to say we're probably, somewhere between 3 and 5 years. Now, past performance is not a guarantee of future results, but 3 to 5 years typically double the money, right? On a lot of the real estate deals we're doing. Not a guarantee. We got to go make great, sound decisions.
Right.
We love multifamily. We love mobile home parks. We love industrial.
Yes.
We also like lending when lending makes sense. And then also, if and when, let's say, your daughters get older and they're ready to start a business, they're ready to invest in real estate, and mom and dad want to partner with them, guess what? The trust can come in. Be that joint venture partner, tax deferred, to fund that next chapter, right? So I feel like the deferred sales trust, it gives you those years. And, I have kids the same age as your girls. And I'm going, my wife and I, we got so much time with them before they're 18 and 20 and off to, their world.
Right.
And that time you never get back, right? And it's precious moments. And at a certain point you go, the cash on cash that I can receive here, if I can increase that, and I can way increase my return on my time, the ROT, right? Wow, like this thing is priceless. Like I would pay, why wouldn't you do it, right?
Right.
That is, and then we also add to that, you get a new depreciation schedule when you partner with the trust. You get up to 80% of that. You can also, eliminate estate tax if you get into those big estate tax amounts. You can also defer the income tax. You guys are in California, so the ability to defer income tax.
Right.
These are all the things that we want to always make sure we're understanding the onion, peeling back the onion of how to make the DSC an investment, not an expense.
Right.
Yes,
Right.
absolutely.
Being able to dial in our income is huge for us right now, and it's wonderful. It's just we don't need it. We don't necessarily need it to sit there. If we do, we pull it out, and it works very well.
Yeah. It's flexible, right? With not only lifestyle, but flexible with financial needs and wants, and the trust can delay that income
Absolutely.
and pay portions of that interest. And right now we are paying. We can turn it on or turn it off. I forget if we're actually paying right now. If it's just accumulating, accruing. I think it's just accruing
small
right
amount.
now.
No,
small amount. We started a little bit. Yeah.
Monthly basis. Yeah.
Yeah.
$1,000.
Yeah. Okay. Cool. Let me pull up these questions because I'm running out.
Yeah.
So, all right. So we covered that. We touched trust, accrual, and fees. Okay. Okay. This overall impact. Overall impact. So if you had to put it in like 3 sentences, Warren, how is the capital gains tax solutions and the deferred sales trust, change life, for you guys, for the family, especially now that you have more time to focus with the family and have to not to be so active in the property ownership?
It's given us much more time, actually more money, and it's also expanded. I've learned so much from it. I've got to learn more than just doing an apartment building or, because there's so many different investments out there and so many different strategies, and I get to learn. And that to me is one of the best parts.
It sounds like growth and learning is is another aspect of this that was valuable.
Yeah.
Plus the cash on cash term, plus the more time.
Correct. And I didn't know that would be the byproduct of it. It just kind of appeared. I didn't consciously think that, I'm going to learn and grow. And I did.
That's really neat. How about you, Kat? How about you? Same question. Like, what's been the most impactful part about, working with capital gains tax solutions, myself, the deferred sales trust? What's been your feel for that?
Well, I've also been able to not just focus on the girls, but focus on the community. And so I volunteer my time. I go to the elementary school and started a chess club. And who knew that there were going to be 30 kids coming for 3 hours to play chess?
Wow.
It's interesting. It's a lot of time. It's crazy, but they love it. They love to play chess, and to share that and have the time to share that. I also am reading to second graders. I just need a little somebody to read to them. I still read to my 12-year-olds. And so I'm able to do, and of course the water board at our community, doing that. So it's given me time to do other things than just.
This is so cool. I'm learning this stuff for the first time now too, right, from you guys. So this is very rewarding to hear this. What would you say, Warren, to someone who's maybe on the edge? Like, should I do it? Should I not do it? Like what maybe some encouragement for them? If you could go back and talk to yourself, let's say 2.5 years ago before you did it.
Yeah.
Even though you guys did it, like what would you say? What would you say to that person?
I would say that if you're thinking about a change with your financial portfolio, that definitely I would recommend entertaining this idea, because it's just been exactly what Brett said it would be. And you said, and I would hope that people could could, open up to these new ideas to investigate them, because I think they'd be really happy.
I think you said something that brought us over and said, okay, we can always go back.
Mhm.
We can always buy another piece of property.
Mhm.
If we're not happy with this, we can get out, pay the capital gain taxes, and go buy another piece of property.
Mhm.
It's nothing stopping you from it.
Exactly.
And that's so the flexibility was there and always
Right.
has been there.
Yeah, it doesn't
So-
have to be forever, right? You can
Right.
do a 10-year
Correct.
note, you can do a 5-year note, and you can always adjust it along the time.
Correct.
And you can accelerate the note and just pay the tax, and then you can go do your next deal, or you can joint venture partner with the trust and still defer the tax and still do your next deal.
Right.
So there's
Yeah.
lots of like off ramps or exits that you can go on.
Absolutely.
And I think that helps to say, okay, this is not a forever thing. It doesn't have, if I don't want it to be, but if it goes the way I want it to go, maybe it will be a forever thing, right?
Right.
Absolutely.
Right. Right. Yep.
I think about it already.
Yeah.
We're only 2 years into the 10-year note,
Right.
and I'm like, 20 years.
30 years,
I'm already
40 years.
I'm already kind looking at it that way.
Yeah. Yeah. Okay. Excellent. So let's see on the next thing on the list here.
These are the tough ones.
Yeah. Okay. On a scale of 1 to 10, Catherine, how likely are you to recommend capital gains tax solutions, the DST, to friends or family if they were here today?
Well, I already have. So I
Okay.
guess that you got your answer.
Okay.
I'd say about a 10.
Okay. Awesome. Warren, same to you. On a scale of 1 to 10, how likely you'd recommend capital gains tax solutions in the DST to your friends or family?
I would highly recommend them. Scale 10.
Yeah.
Awesome.
10 for sure.
And you
Awesome.
have already too.
Yeah,
I mean,
I
you
have.
talk about it
Yeah,
all the
I have.
time.
Uh-huh.
Well, I don't talk about
A lot. Often.
because it is new to most.
Yeah.
I'm very careful on how I talk about it.
Yeah.
Because lots of times it's met with resistance.
Mhm.
Because it's new. Change is hard for anybody.
It's like riding a bicycle, right?
Mhm.
Yeah.
I remember your analogy.
So-
Yeah.
I'm just right now. I'm like kind of on the sidelines, going, "Well, it's doing fine. It's doing fine,"
Uh-huh.
and kind of letting that speak for itself.
Yeah, absolutely.
So
Excellent. Cool. Let's move to the lightning round. We can talk about the deferred sales trust. Kat, what are some common sense practices that you believe are often overlooked by investors today?
Oh goodness, you're asking the wrong person. Some comments, numbers. Just do the numbers. An Excel spreadsheet.
Mhm.
Do your margins. 10% on this side if it goes bad, 10% if it goes better.
Mhm.
And know your boundary conditions and just look at it and see if you're willing to take the risk or not.
I think that's a great answer, by the way.
Oh.
That's so common sense. I love that. Warren, same question to you. What are some common sense practices that you believe are maybe sometimes overlooked in investing today?
ooh. Checking out the area. I mean, being a better scout, more thorough background.
Mhm.
I think
whether it's
'cause
real estate or not.
in real estate.
Mhm.
talking real estate.
Mhm.
I don't.
That's good.
That's a tough question.
No, that's good. I mean, you're also here at the DLP conference, right?
Yeah,
Meeting
yeah.
all the leadership in person. You're spending time with me and our team, right? And other clients that are here.
Yep.
So I think that's also a part of, it's the continual checkout of all of this,
Right.
Yeah,
Right.
I attend the webinars that DLP gives. I'll be launching our webinar series once a month coming up.
Right,
That you guys
right.
are always, of course, invited to. So I think does that sound like kind of what you meant by that?
Yeah.
Mhm.
I mean, just making sure that you're looking. When you're going to invest your money.
Yep.
Do the research.
Do the research.
Good.
Yeah.
Now, question to Kat. This is stewardship, right? So part of the Build to Billions podcast, so you can give all of it away, is this idea of a mindset of stewardship over ownership. So what would you say is your way that you feel is going to be the best way to pass that on to the girls and to be able to practice that?
Dead silence, crickets. Gosh, I don't know. That's what these past 2 days have been getting me to think about that. So many people, myself included, are just thinking of today and what happened yesterday and what I'm going to do tomorrow, and not really thinking of the big picture. Get out of the trees, go look at the forest and figure out really what's the best thing to do. I don't have that answer yet. This weekend or this week is what started me thinking about it. And get back to me on that.
That's a great answer, though. It is, though. Okay, so like taking a step back and being intentional, getting out of the day to day, and saying where are we going? How are we going to plan? And what does this look like down the road? Right. Warren, same question to you. So maybe what you're learning this week, or just in general, like how do you feel it may be a great way to instill a stewardship mindset and a legacy mindset for you and your family?
I'm going to defer back to this weekend because this is why we're here. We're at this conference to hopefully come up with a good plan for that, because it's super important to me. I think Kat and I actually had a financial planner not before we met you, but stock market kind of guy. And one of his questions was, do you want to have a legacy, or I think he used that term, but or monies for the kids when we pass it on. And I was pretty much for that. I was very much yes, but looking back on it now, I don't think that's a complete answer. I want to have the legacy, but I don't want it to be all financial.
So well said, right? I think that was a key thing that they pointed out today. The relational legacy, the spiritual legacy.
Yes.
There's the social and giving back legacy, and there's also the wealth and passing that legacy. But wealth is so much more than just the financial, tangible wealth.
Yes.
Right.
Yes. And in one of today's speakers, he had his top 5 things that he passes on. And 1 through 5, 5 was the wealth, the financial part.
It's the 5th one.
Yep.
Right.
So I thought that was really interesting. Yeah. And so we have a lot to put together and think about. But I definitely think it's super important.
Yeah. And so a couple of the speakers are John Gordon, John Maxwell, Don Winter, a few others that are incredible. Martin Luther King Jr.'s, I think, would be nephew, right? Nephew spoke, and I forgot the gal's name who started
Sally
for the Wrestle for Girls
Wrestle Like a
Girl, and her story,
and there's
Lonnie. Yeah. Lonnie, something that was incredible too. Lonnie, but just the key is like getting in rooms with folks that are focused and intentional about their mission, vision, and values for themselves and their families. And it's sometimes it can feel isolating as real estate owners or entrepreneurs. And if you're not in the rooms and you're not working on it together and getting the energy to push forward, it's so easy to get caught in the day to day. It's so easy to get caught in yesterday, right? And John Maxwell said it well. You're either preparing, you can either prepare or repair.
Right.
You can prepare for today or tomorrow, right? Or you can be repair yesterday, right? So you want to be preparing, right? Yeah. Good.
Right. That was good.
Yeah.
It was excellent.
Yeah. So, okay. Let's see. The next question here. I guess it would be just the one, if you could speak to the girls, right? I'm thinking about, your twin daughters are 12. I have also a 12 and 11-year-old daughter. I also have a 14-year-old who's kind of running behind the scenes here as we're hanging out, recording this. But, Warren, what would be the mission, vision, value that you want to start to pass on? Like, is there anything that you would say to them that say, hey, looking forward, 50 years from now, or maybe we're probably all gone here at that point. And, what would be the thing that you'd want to see instill that they've taken from you guys and you've instilled in them? Anything that comes to mind right now?
Treating people right. Hard work, because it makes life easier. Because life has its challenges. But I think if we can instill that with the effort, the input is directly related to the output. And that's what I like to be able to make sure they understand.
Thank you for sharing. That's meaningful.
Yeah.
Kat, same question to you. If you could
Well, I see. I think it was Thomas Jefferson that said, "The harder I work, the luckier I get."
Right.
And I'd love to instill the hard work in the girls. Smart, hard work. And I'd like to instill in them to give back, because it feels so good when you step outside how you feel, what you're doing, and look at others and see where they are and empathize and sympathize and just give back to them. That's
beautiful. That's great. Hard work, giving back, being intentional, caring for people.
Yes.
I want to thank you guys both for trusting Capital Gains Tax Solutions, trusting me, and I feel like I can be a small part of helping with that legacy. And we take it very seriously. We take it as stewards, and I want to just thank you for that trust in me, and as well as DLP Capital, and as well as the attorneys who put this together. It's not just me; it's an entire ecosystem, if you will, of network that to perform this, which is part of what the tax code is complicated. But at the same time, if you bring the right pieces together, you can do a lot as a team, right? And that's really the key. And I want to thank you for sitting down and sharing your story. It's not easy to do all the time with out to the world that we're streaming here. For if someone wanted to reach out to you that's considering the deferred sales trust, would it be okay if they reach out to you, Warren?
Absolutely.
Yep.
How about
Absolutely.
You, Kat?
Yeah, of course.
Okay,
Please
cool.
do.
We'd
Please
love to do that.
Awesome.
Yeah.
Well, I want to thank all of our listeners for listening to the episode of the Building to Billions podcast. Also, we're streaming on Capital Gains Tax Solutions YouTube channel and podcast. As always, we're on a journey with you to scale from millions to billions, so we can give more, all of it away. And we think the key to doing that is practicing a mindset of stewardship over ownership, and also being very intentional and practical about building mission, vision, values with you and your family and for your team. And so I want to encourage you to take action today. If you're wanting to set up a deferred sales trust and get started, you can go to capitalgainstaxsolutions.com. It's never too early to start to plan for that exit plan. You can also check out the book, Building a Capital Gains Tax Exit Plan, on Amazon. And it's our best-selling book on Amazon. We have Kevin Harrington from Shark Tank. We also have Don Winter from DLP Capital in the book. Tyler McBroom, who is the CPA for one of the CPAs for Tony Robbins. Check out the book, and this will give you a good introduction to the deferred sales trust, and also some ideas and questions to be asking yourself before you exit by building that capital gains tax exit plan. Thank you for watching this today or listening to this. Please share, rate, review, subscribe, and we'll talk to you again all real soon. Bye now.